The Reserve Bank has raised the official cash rate by 50 basis points to 3.5% as widely expected. Joining us is Kiwibank's chief economist, Jarrod Kerr. Thanks for joining us, Jarrod. Just wondering, what did you think of the Reserve Bank's language today?
I thought it was very punchy, what we call hawkish. They're clearly on the warpath against inflation, and they think they've got a lot more to do. The central bank actually contemplated doing a 75 basis point hike today, which is a lot more than what the market had anticipated.
In terms of that, what are the chances they could have gone 75 basis points?
Well, it seems about half the committee thought it would be a good idea, and then the other half wanted to wait and see how much traction they're getting on the rate rises they've done so far. And I tend to agree with that half of the committee. There is a lot of interest rate hikes being delivered and coming through, and there's a lot of pain on households. On top of high inflation, we've got high interest rates and falling house prices.
What traction have they managed to achieve?
Well, interest rates have more than doubled over the last year and a bit. So we saw interest rates drop to a low of around 2.5%. They're now at 5.5%, 6%. So, that's an extra $24,000 on a mortgage of about $800,000. It's a significant rise.
Where to now? Are they going to continue with their 50 basis point hikes?
I think so. I think we get another 50 in November. And I actually think they pause there. I think they'll have seen, quite a lot of traction domestically, and I think there's a significant slowdown in global growth coming. And by February, which will be their meeting after November, I think they'll be in a position that they can pause. Of course, could be wrong. The risks that they continue tightening and go towards 4.5%.
Well, some of your colleagues and other banks are expecting high fours, even nudging close to five.
Yeah, that's right. I think we put a much higher weight on global developments. The Northern Hemisphere looks like it's going into recession, particularly the UK and Europe, and the possibility of a US recession. So if that happens, that is going to have a magnified impact on Asia, and our trading partner growth is obviously slowing quite dramatically. China's already struggling. So I think commodity prices in that world continue to decline, and the inflation pressure that we import will be declining quite quickly.
The Reserve Bank did note that those inflation pressures remain quite intense.
Yeah, it's more the domestically generated inflation I think they're worried about. We've seen a lot of inflation coming out of the housing market and construction. I think that'll ease over the year ahead. And our labour market's very tight. That's probably the most important thing for the Kiwi economy at the moment, is that our labour market is so tight and wages are rising, and actually the growth in wages is accelerating. So that puts more pressure on domestically generated inflation. I think that's what's worrying them the most.
So they can stop at 4%, do you think?
I think so. We'll be at February by then, and we would have seen a lot of international data, which I think will deteriorate quite quickly. And I think the outlook for inflation will have improved markedly by then. But like I say, the risks are clearly tilted towards having to do more, and they may even go up to 4.5 or even 5%, as you said before.
Are you expecting inflation to trickle down from here? Latest data comes out later this month.
Yeah, look, inflation, I think we can say has peaked at 7.3%. It's the speed at which inflation declines. It's the rate of that decline that's important. And I think the tradables, the internationally generated inflation that we import is going to decline quite quickly, whereas the domestically generated stuff is going to be a bit more sticky.
And what about wage inflation?
Yeah, wage inflation continues to accelerate, and I think that's a really positive development given the cost of living crisis that we've called upon, the rise in interest rates, and clearly the fall in house prices. That is a very good development.
Do you expect other central banks to pause relatively soon? The Reserve Bank of Australia just nudged 25 basis points high yesterday.
Yeah, I found that decision quite interesting, actually. The RBA was very slow to start raising rates, and there looks like the peak in their cash rate is going to be much lower. They did have lower inflation to begin with, and their economy was a lot slower than ours coming into the COVID pandemic. So they don't quite have the same inflation pressures that we have. But yeah, I found that quite surprising. So I think the RBA, like ourselves, put a much higher weight on what's going on internationally, and I think that they will be, looking at their commodity prices and thinking that they're going to come off quite quickly. Trading partner growth is slowing for them, so the hard commodity prices that they get in iron ore and coal and LNG and all that stuff that they export likely to come off quite sharply. So that's why I think that they're more cautious, and I think the RBNZ will end up being more cautious.
Jarrod Kerr, thank you.
Pleasure. Thank you.